So if you know that this is your low and this is your high, doesn't matter what swings happen in between, it's still bullish at this point. You're breaking highs, even if it looks like it's going bearish on the internal. But that's the point. This is what we're going to talk about today. Internal structure. What that means is the swings in between the swing structure. And what internal structure does is it moves the market around for day traders, basically. It moves the market around and gets people enticed to different positions and gets liquidity in the market so that there's orders. There always needs to be orders in the market because the market wants to move and fill all the orders. The market's job is just to fill orders. It wants everybody in the market to seem hard, and it wants all the orders in the market, and it wants to fill them all. In a perfect world, everyone would buy and sell at the same price. The market would be happy with that. It wouldn't care. It just wants to transact. Brokers, though, want to make money on that. So the market has to move and bring in supply and demand. If there's no buyers at a certain price, it has to go down. The price has to get more enticing to bring buy orders in the market. And it has to keep going down until there's enough buy orders in the market to suck up all the sellers. When there's the exact same amount of buy and sell, the price will stay the exact same for that however many ticks, but there's the same amount. It's the same thing when there's buying. When there's a whole lot of buy orders in the market and there's not a lot of sellers in the market, the price has to go up higher and higher and higher to entice people to sell, because at a higher price, if you bought lower, you make more profits. And if you're trying to sell from the higher you sell from, the farther it falls, the more money you make. So it's advantageous to sell at a higher price and buy a lower price. Because of that, the price will go up higher and higher and higher until enough sells get in the market to absorb all the buys. And when there's the exact same amount, the price doesn't move at all. So that is how the market moves. Internal structure kind of maps the movement in between the swing structure with these concepts in mind. So basically, you'll see the market follow its swing structure, and then after swing structure is broken, a lot of buys have happened. Not a lot of people are going to be buying anymore. The move has already happened. It's already broken structure. More people are enticed to sell. People are going to take profits. People may think it's a false break. There's a myriad reasons we can list why more people would sell than buy at this point. So the market, or at least more money, is moving around, sells instead of buys. And so the market is going to move toward where there's a whole lot of buyers or a whole lot of sellers. After enough people start selling at this point, because there will be less buyers, the market will pull back, moving its way down to fill up more orders. And then when enough orders are filled up that not very many people are selling anymore, or not a lot of money is selling or ready to buy, because this is it. This is the price that is agreed upon, basically, the best price, right? The best lowest price where the institutions get in. It will go up and break structure. And it does that internally and will keep going in the direction of the trend until it pulls back, and it'll sometimes get bearish. So the internal structure will shift as just like the swing structure will, where enough people will have bought at this point that even like traders on the internal structure are all kind of done buying and people are selling. There's a lot of profit taking now. There's a lot of people trying to get in on sells, and they'll get in on sells, and that'll break through the internal structure because buys aren't holding the market up anymore. That will happen, and it'll lead the market down until it picks up enough demand, enough buys get back in the market. Those swing points are a lot of supply and demand. So even though the internal structure might seem bearish, that's why you're mapping out both the swing structure and the internal, because it might just be leading its way down into the swing structure. And once it fills up enough demand on the swing structure, the internal structure still will eventually shift. But once the internal structure itself shifts, it's a good indication that it's going to keep going in a direction until the next major phase happens. And since we're in an upturn right now, it's more likely that we'll break through the high than the low. Since we pick up at the low, it's likely if the price will go eventually through the high, right? Without revisiting the low first. And that's how it works, right? And the internal structure shifted bullish. And as you can see, it stayed bullish. Internal structure shifts in bullish, and then eventually it shifts bearish. But it could only be bearish to lead the market, just like the swing structure, through the internal trend back to line up with the swing trend, right? So mapping internal structure is a little more complex than swing structure. So instead of marking the zones, because there's so many, I just look for continuous candlesticks, right? So one candlestick patterns don't work for me. Like this wouldn't really be a swing, even though on a lower time frame, it probably would be this little one turn shift, but internal swing, that's fractal to me, right? When we're talking, but multiple bearish candles in a row, it could just be two or more. That's an internal swing to me. We got multiple bearish, multiple bullish. That's all it takes, two or more. So this one had three little bearish candles. And as long as there's more than one in a row, let me find the example of this one's kind of complex, but This is why I'm discretionary. If you're being mechanical, you wouldn't really consider that an internal swing, but this one is because there's two, right? Let's pretty much that simple. Here's an internal, swing. Anything two or more to me is an internal structure change, basically. If the market starts moving down, two candles in a row, one candle's not enough. It's not enough to scare me. Like when you get more used to the market, a candlestick won't really scare you anymore. One candlestick against me is not anything. Two candlesticks against me means that the internal structure could be pulling back, right? And just like the swing structure, when the internal structure pulls back, it's not shifting bearish until it breaks. So here it goes. My stare newer traders, but it's just pulling back to the internal structure. And it's not until it actually finally does break, which eventually it will, but statistically it's more likely to carry than not, especially if you're in line with swing structure, right? You're adding all this stuff up. Show some more examples. So either an extreme, both swing, or whatever, we have more than two or more bullish candlesticks. So that created an internal low. And internal and swing structure both need to be closed to change. They cannot be whiffed, in my opinion. So there's our internal structure right here at this point. It teased us, then it broke through it, create a new internal structure. And then once two candlesticks happened, that's what marked out as the high, because before that it would be this because it broke through. So we have the low, and then at this point we have this high, so it'd be like that, and then that appeared after that. Once that broken and closed through, that makes that a strong. That's the difference. I don't need the structure to shift because it can just be a internal pullback, and it happens faster. Even those are the daily, so it wouldn't be fast at all. Beat as doing saying happens fast on the charts. All that closing through tells me which one's strong and weak. And so now that one's strong. Even though this one had appeared to be strong up before, it changed. It looked like it was just liquidity, which again I'm going to get into for the last part. Internal structure, we only have one bullish candle, so that doesn't count, but this one had a few bearish. So once this pulls back, close through there, making this one strong, and then as soon as we get a few bullish candles and then a closure through it, hopefully you guys get the idea. And it's a lot more discretionary, but just you're looking for the market to swing a little bit, pretty much, and that's internal structure. And the role of internal structure is to lead the swing structure along to do its job. I'll show you what happened. So internal structure is bearish, comes down to the swing low. The internal structure changes, switches bullish until eventually we break the highs. Then eventually internal structure starts shifting bearish. Boom, boom, boom. Internal structure leading us down into the swing low. And then we have a break through the swing low, which changes swing structure. So now internal structure all becomes stronger structure, and the swing structure is bearish, and that's internal and swing structure. That's part two, internal structure.